afternoon to all, and thank you for joining us into this, our third webcast in our series on Introduction to the Value-Added Tax. My name is Maria de Los Angeles Rivera, and today I'll be accompanied by Tax Manager Javier Oyola. Today's topics are filings, documentation, certificates, and we're going to be doing a review of what are the taxable transactions under the new value-added tax proposal or system already approved in Puerto Rico. Remember also that the last webcast of this series will be next Wednesday, September the 2nd, and we'll be talking there and going through what an implementation process for a VAT would look like here in Puerto Rico. Again, the agenda for today, we'll give a little bit of an introduction. We'll talk about what certificates and what waivers are available under the VAT system, tax returns and declarations that are due and need to be filed in Puerto Rico under this system. We'll talk a little bit about the bond process and how you can qualify for this type of extension of time for payment. And again, as I mentioned before, we'll do a review of the taxable transactions, exclusions, and exceptions under the VAT in Puerto Rico. Most of you have seen these charts before. I'm not going to go into this one now, but this is the timeline for the changes introduced by Act 72. And I just wanted to mention that last week, the Puerto Rico Treasury Department issued the first circular letter in regards to the new taxation of designated services and business-to-business services, and that was circular letter 1512. We issue a tax alert this Monday, so if you haven't received it, please contact us so we can add you to our mailing list. The important thing is, and especially addressed to designated services providers. Remember, the designated services providers are attorneys and all those professions that are or need registration at the Department of State, like CPAs, architects, drawers, designers, engineers, etc. As of 9:30 or until 9:30, these services continue to be exempt, but effective October 1st, those that are rendering these services need to start collecting the 4% tax on these services. And for these purposes, they need to do a recertification with the Puerto Rico Treasury Department in order to obtain and be certified as a withholding agent. As of today, these service providers, the designated service providers, hold what we call a red certificate, which is a no withholding agent certificate. Since they're going to be required to withhold or collect the 4%, now they need a new certificate, a green certificate, which is the withholding statement certificate. So in the case you are one of these professions or are receiving services from one of these providers, you must be sure, starting October 1st, that the provider or supplier of these services has recertified himself or itself and has a correct green certificate. As of further communications in this area, we're expecting a couple of more circular letters from the Puerto Rico Treasury Department, especially on timing and scope of certain of these, or the application of this new tax of 4%. So as soon as we are aware and are able to review these communications, we'll proceed and communicate it through a tax alert. Enough for EVU. Let's talk about EVA, VAT. And again, one of the topics for today is the certificates and waivers. And the first certificate that we have under VAT is what we call the Merchant's Registration Certificate, which is the registration certificate that every merchant that is doing business or wants to do business in Puerto Rico must be obtained before starting operations. Please see that we talk about any person, and the way the term person is defined in the law, it's a very broad term. And for example, it includes individual, businesses, partnerships, common enterprises, associations, corporations, LLCs, states, trusts, government, municipalities and agencies, and public corporations to mention some. A merchant is defined as every person that is engaged in any trade or business in Puerto Rico. If you remember, under the sales and use tax, in order to determine whether a person had to register for sales and use tax in Puerto Rico, there were two things that needed to be present. First, nexus, and then source of income. In the case of VAT, we don't see the term nexus anywhere. What we see is the definition of a merchant. And as you might expect, it's a very broad and detailed definition, which tries to establish connections between the person and Puerto Rico, and the connections are, in some instances, are very common, like, having property, having employees, having inventory in Puerto Rico, but some of them are very subtle, like in the case of affiliates or agents. So in case you have any doubts that if your activity or a proposed activity will have or will be considered a merchant for VAT purposes in Puerto Rico, this is a definition that needs to be studied in great detail. In addition, the law establishes certain types of persons that will not be considered merchants and therefore will not need to be registered for VAT purposes. For example, exhibitors that come, like for conventions and special events, there is a special certificate for those. Pension plans, residents associations and condominiums associations, a graduating class or a similar association as long as it's comprised of only students, there is no legal entity, and the funds collected are for activities for the benefit of its members and does not own any real property in Puerto Rico. Also, the traditional lottery sellers and independent distributors within a multi-level business are not considered merchants for these purposes, and therefore they don't need to register. Under the VAT rules, there is a new provision for control group or related entities groups by which if you have different members of this group, they can elect to be treated as one merchant for VAT purposes. So instead of having every single component of the group register as a merchant, there be an election to just register as one group. This is something really new here, and certainly we'll expect more guidance from Treasury on how this is going to be applied and how this will apply for the filing of returns and all related documentation. One important thing to mention for the registration certificate is that it's not transferable. So if there is a change, like for example, you sell your business or you cease operation, you need to notify the Puerto Rico Treasury Department within 30 days in order to cancel that certificate. This is a new certificate which we have mentioned before in our webcast, and it's the Small Merchants Registration Certificate. It's voluntary, so it's not the small merchant is not obliged to request this certification, but it applies only to merchants with gross sales of less than $125,000. This limit or this amount is going to be determined as of the immediate preceding year for which it's been applied for. And in the case of control groups of corporations or entities, the whole group's gross income has to be considered in order to determine whether the $125,000 limit is met or not. In case there is no operations for a full year, then you will take into consideration just the gross sales for the period the business has been operating. And if no operation has started yet, then forecast. You will use forecast of gross sales for the subsequent year. Why would someone want this certificate? Well, first, if you qualify or your entity qualifies for this certificate, first, the merchant will not be required to collect the VAT on its sales. And second, that merchant will not be able to credit any VAT it pays. You know, when we see $125,000 as the total gross sales limit, you know, we will think that probably the merchants that will qualify for this certificate are a small amount of merchants because we're talking about gross sales. But just be in the lookout. If you contract with one of these merchants, be sure to verify what type of certificate they have in order to be sure that if you're paying the VAT, it's going to be sent to Treasury as collected. The next certificate that we'll find under the VAT is the exemption certificate and zero rate for manufacturing plants. Remember, under EBU, the manufacturing plants had also a certificate. This certificate will allow the manufacturing plants to import and purchase articles for manufacturing subject to a tax rate of 0%. And again, we have talked about this 0% rate before. There are only 3 items or 3 transactions that would qualify for a 0% rate. Those are the sales of goods for export, the sale of services for export, and raw material and articles for manufacturing for a manufacturing plant which has this certificate. The effectiveness of this certificate is of 3 years, and it must be requested. It's not something that Treasury will issue automatically to a manufacturing plant, and we expect that if you are currently holding a manufacturing certificate under EBU, certain procedures will need to be done to be recertified and obtain this new certification. Again, what will qualify for the 0% rate for the manufacturing plant would be articles for manufacturing, and this is defined in general as raw materials and machinery and equipment that is going to be used in the manufacturing process. Therefore, any equipment or supplies that are acquired, for example, for the administrative side of the plant, will not qualify for the 0%, and the manufacturing plant will have to pay the VAT, and the seller will have to collect the VAT on those sales. When a seller is presented with one of these certificates, it is authorized to sell without collecting a VAT. So it works also as a waiver of the responsibility from the seller to collect the VAT. The seller, though, needs to keep evidence and documentation to substantiate the sale at a 0% rate, and that would be any form designed by the Puerto Rico Treasury Department, similar probably to a 2916 under the sales and use tax, and copy of this certificate and zero rate for manufacturing plants certificate. When a seller introduces or buys or acquires, like for example, inventory or machinery equipment to be sold to a manufacturing plant at a 0% rate, remember that what is at the 0% rate is the sale of that item. But when it is introduced by a distributor, for example, into Puerto Rico, that distributor will have to pay the VAT upon introduction. The important thing is that since the transactions or sales to a manufacturing plant under these circumstances are taxable at a 0%, that importer or distributor will be able to credit that VAT that he or she paid upon introduction. And as we will see further down, might be able to get a refund from the Puerto Rico Treasury Department for that VAT paid. We have also what is called a certificate for exempt purchases, and these certificates allows merchants, certain merchants, to acquire or import goods and services exempt from VAT. It also has an effectiveness of 3 years, and it also waives the responsibility of a seller to collect the VAT when the buyer presents or shows this certificate for exempt purchases. So it's also a waiver. Who qualifies to get an exempt purchases certificate? Only 4 types of merchants qualify. First, the United States government, the states, District of Columbia, and Puerto Rico government and all its agencies. any hospital unit that the hospital unit will be able to acquire again machinery and equipment to be able to be used in the providing of the medical services or hospital services they are engaged in. Any merchant engaged in a tourism business, again, only those items acquired to be used in the tourism part of the business, and bona fide farms. The certificate must also be requested from the Puerto Rico Treasury Department following any requirements or documentations that the Department of Treasury may require. As with the sales for to the manufacturing plants, the importer or the distributor of the items, of the articles that are going to be sold to a person holding the exempt certificate, the exempt purchaser certificate, will have to pay upon introduction the VAT, unless the article itself is exempt. Nevertheless, since the sales are exempt as of today and as it's written in the law, the distributor will not be able to credit this VAT that is going to be paying upon importation. We certainly expect more guidance from the Puerto Rico Treasury Department, because certainly this will increase or might increase the cost of, for example, the government agencies, when they contract for acquiring machinery and equipment to render their services. And if this tax is not going to be creditable by the importer, somehow this cost will have to be passed on. We also have what is called an eligible merchant certificate. And this is kind of similar, but not so similar to the eligible merchant certificate, eligible seller certificate under the sales and use tax. And a merchant that qualifies for this certificate is going to be able to further on obtain a refund from the Puerto Rico Treasury Department on the VAT it has paid on all its introductions. Who qualifies for this? A merchant with a volume of business in excess of $500,000 during a 3-year period, which at least 80% of its total sales are subject to the tax rate of 0%. And remember, 0% are sales for export, including goods and services, and sales to manufacturing plants that hold a certificate of 0 rated and exemption. So if you are one of these merchants which mostly sells to manufacturing plants, for example, you will qualify to get one of these eligible merchant certificates, and that will allow you to, first, to credit the tax you pay upon importation, and second, if the overpayment or the credit that is shown on your tax return, on your monthly VAT return, is at least $10,000 or more, you have the right to claim a refund right there. How long would it take for you to get the money back is a question mark, but at least you can establish that you have the right for that refund.
Welcome to all. Before starting with the discussion of the forms, we want to remind everybody that we are currently under a hybrid sales tax system, and many, if not all, of the filings that we currently have are pretty similar to the ones under the VAT system with certain changes. Well, Act 72 lists the requirement that was introduced under the sales tax rules of filing a declaration of imports for any articles introduced to the island, and specifically states that it will be a requirement before taking possession of the articles. This rule is similar to the one that we already have under the sales tax system, and we understand that they will change the form to adapt the form to the VAT system, but they probably will still use in PICO system, that is the filing system of the Puerto Rico Treasury, for the filing of this type of declarations. That being said, the law established that the filing of the declarations and any other VAT returns will be electronically, but the content of such forms have not been clarified yet. We expect some regulations and other publications from the Puerto Rico Treasury with specific rules regarding the acceptable methods of transfer and the information required on the declarations. It is also important to mention that the declaration is needed for all the introductions to Puerto Rico, including any air carriers such as United States Postal Service, Federal Express, or UPS. In addition to the declaration that we already discussed, Act 72 also requires a tax on imports monthly return to report the introduction that the merchant already declared. This rule is the same that we currently have under the sales tax system. This means that if in a month you declare 5 shipments to Puerto Rico, then on the 10th day of the month following the month of the import, you will have to file a tax on imports monthly return. Currently, sorry, we are verifying the system. Okay. Currently, the system works automatically, and the total imports that have been declared is automatically transferred to the imports return. The taxpayer just needs to confirm that the amount agrees with the monthly imports and verify the payment that has been made, and then file the return. But the majority of the cases, it is already completed. Similar to the declaration of imports, Act 72 requires the electronic filing of the imports monthly. Obviously, as of today, we have no regulation or specific data related to what are the changes from the system that we already have, or what would be required. Therefore, more guidance and publications are expected from the Puerto Rico Treasury. As in the current sales tax system, we have an additional filing that is required, and is the monthly VAT return. This return is needed to report your sales, talking about property or services, to your clients and the VAT collected from those sales. The return needs to be filed the 20th day of the month in which the taxes are collected, and we expect some interesting changes to this form if compared with the current one, because here is where the taxpayer will claim all the credits for the VAT paid, and we don't know what the Puerto Rico Treasury will require with the monthly returns to claim those credits. This form, talking about the monthly VAT return, is also required by electronic means, and the Puerto Rico Treasury will regarding the needs, what needs to be included, and specifically what they will require in order to claim the credits, as we mentioned before. Please remember that in the case of sales tax, the taxpayer is a holder of a reseller certificate, claims credits for the sales and use tax paid on items that are purchased for resale. But under the VAT, the taxpayer will have more inputs that will be subject to VAT, not only items purchased for resale. And as a result, more credits need to be claimed. For that reason, we understand that the Puerto Rico Treasury will require more information to allow the credits. An important disposition related to the transition between the sales and use tax and the VAT is that those credits that are available as of March 31st, 2016, and that have not been claimed as a refund should be taken as a credit in the subsequent VAT returns, using them in a chronological order until exhausted. The important thing here is that they are not refundable, and therefore if the amount of credit that is being carried forward is a big amount, the taxpayer should consider requesting a refund before the implementation of the VAT system. There is a special filing required by Act 72, and it's a filing for those merchants that are holders of a small merchant's registration certificate, which Maria already discussed. And it's an annual informative declaration that needs to be submitted 60 days from the date of the filing of the income tax return, including extensions. This reminds me the original implementation of the sales tax that also required at some point the filing of an annual return, and it was a one-time filing eliminated later. The small merchant's declaration should reflect the total value of the sales, no matter if they are goods or services, and any other information required by the Puerto Rico Treasury. Please remember that at this point in time, we don't have enough information about the declaration, but we expect some additional guidance from the Puerto Rico Treasury in order to provide it to you.
With that, we have covered the certificates and waivers that will be present or available under the VAT system in Puerto Rico, and also the returns that you need to be filing. Now let's spend a little bit of time on the bond process and how this can be obtained. As you remember, as a general rule, the VAT for an importer, for example, needs to be paid upon introduction before taking possession. That is, in general, if you want to take possession of your imports in the ports, you're required to go through the system and pay the tax before you're allowed to take possession. There is an exception to this, and it's for those importers that qualify. They'll be able to obtain an extension for the payment of the tax if they meet certain requirements. The Secretary may extend the time established by law, which is upon importation, by a bonded merchant, and authorize the importer to take possession prior to making the payment. But before this can be obtained, a review and evaluation of the volume of business of this importer, the frequency of imports, as well as the experience in the payment of the value-added tax will be taken into consideration in order to allow for this extension of time to pay it. In the case of bonded importers, the extension will take them until the 10th day of the following month to the month of introduction, and they will be allowed to make the payment of the VAT together with the declaration of imports that Javier spoke about just a couple of minutes ago. These apply also for introductions that comes via mail or postal courier, and also for electronic transmissions. All these, again, the bonded merchant, the introduction via mail or postal courier, and electronic transmissions are then required to make the payment by the 10th of the following month to the month of introduction. The authorization to take possession of the tangible personal property that is being introduced to Puerto Rico without making the payment will require the posting of a bond. And again, once the bond is posted, and we will see an example later on, whether there is enough bond available for the introduction. If that's the case, then the importer may take possession of the goods without making the payment. If the bond is not enough to cover or guarantee the total payment of the value-added tax for a specific shipment, then the tax will have to be paid before possession can be taken. So therefore, we can say that once the amount of the bond is established, and again, we'll see an example on that, that amount within a month will be adjusted by introductions or imports of goods that are going to be taking possession without making the payment, and will be increased again once the VAT on those importations is paid. So it's going to be like a moving balance on your bond, and this is all kept in PICO. Again, because you have to go through the system to, declare, make the payments, and etc. So your bond will also be managed through PICO system. In all cases where it's necessary to guarantee the payment of the tax, the secretary may require a cash deposit, a bond, or other security as a condition for that person to obtain the certificate. What we see most commonly is the posting of a bond for the amount established by the Puerto Rico Treasury Department. And the minimum amount for this bond is established right now at $10,000. There is some procedures that have been established by the Secretary of Treasury in order to obtain authorization and obtain the bond. Any person who does not make a deposit in cash, bond, or other security shall not have the right to obtain or retain the bonded merchant certificate. And therefore, the Secretary of Justice and the Secretary of Treasury may exercise any proceedings they feel correspond in this way. Remember, if you fail on keeping your bond or fail in some way to guarantee the payment, then you are not allowed to make the introductions without making the payment. You have to be very careful because these bonds are usually for 1 year, and if your bond has expired, you may encounter problems at the ports when you try to take possession of your goods, because you will not be allowed to do that without making the payment. So please make a note, and if you are a bonded merchant, please verify the expiration date of your bond and whether you are current or not, in order to avoid any delays at the ports. One thing that is being required first by administrative proceedings and now in the law is that in addition to the amount of the VAT that needs to be guaranteed, the bond must include also an equivalent amount, which is 25% or to guarantee or to cover any surcharges, interest, or administrative fines that may be imposed to the merchant. So basically, what is being required as a bond is 125% of the VAT that you want to guarantee with that bond. That 25% cannot be used against importations. As a matter of fact, must remain unused forever until you have, for all the time you have your bond in process in effect, because you cannot use that 25% to make introductions. As part of the process, with the Puerto Rico Treasury Department, you're going to obtain a bonded merchant number, and this number needs to be provided to your carrier in order for the Puerto Rico Treasury Department identify that shipment to be yours and that you're going to be allowed to take possession without paying the VAT. All this is done through PICO.
Adding to that comment, the request is currently in writing and addressed to the Director of the Consumption Bureau, and they will evaluate the request, and the Puerto Rico Treasury internally will complete form. The actual form is the SC2058 with the information of the client and the bond amount that they determine. This form needs to be signed by the insurance company and then returned back to the Consumption Bureau to be established as the bond in the PICO system.
So once you obtain your bonded number, the carrier will transmit electronically to the secretary a document that will detail, the merchandise. That will be the bill of lading, right? And it will detail the merchandise that is being imported and the commercial terms of that merchandise. Then once this is done, you as the bonded merchant should access the electronic system, and we understand it's going to remain the PICO system, to complete and submit the declaration of imports together with the commercial invoice. Then Treasury will issue you the authorization to pick up the importation, and automatically we reduce the amount of the bond for the value-added tax related to that shipment. Then, as Javier mentioned before, by the 10th day of the following month, the bonded merchant will then submit the tax on imports monthly tax return or the importation declaration and pay there the VAT.
It is basically the imports return because you already declared the merchandise when you introduce the merchandise to Puerto Rico. So you're using the bond to declare the merchandise, and then on the 10th day of the month following the introduction, you'll be filing the monthly return and need to make the payment with that return.
Once then the payment is made, the Secretary will release the amount of the bond that had been frozen corresponding to that shipment.
Here we have a little example of a bond calculation. They normally use 3 months of your imports to determine the bond of the corresponding to the taxpayer. And in this case, we have some imports subject to VAT in the amount of $10 million times the 10.5% of VAT. It means that the VAT of $1,050,000. Remember that we need to add a cushion for surcharges, interest, and administrative fines of 25%. So the corresponding amount of that for the surcharges, fines, and interest is $262,000. And then that added to the value-added tax corresponding to the transaction will be a total amount will be $1,312,000 of a total bond. If there are imports in April of $105,000, that amount will be reduced from your bond. And then when you file the return on the 10th day of the next month, that amount is reinstated to your bond, so it will remain the same. If the payment is not made, that amount will be reduced from your bond until you pay the total amount.
The amount of the bond is really an amount that you should determine, depending on your operations and the amount of imports that you have during the year. We currently recommend our clients to have at least 3 months worth of VAT included on that bond amount, just in case you don't run out of bond, just in case you increase your importations.
And this is the current process that we have under the sales tax. We understand that it's going to be pretty similar with the VAT system. However, they may change it through any publications that they may issue, but this is the process that is established and the one that the Bureau is following right now.
Okay. Now we're just going to go through a small review of what are taxable transactions and what transactions are subject to or will be subject to the VAT in Puerto Rico. Please, just to start with, what are the transactions that are subject to the VAT? Well, in general terms, it would be the sale of goods and services in Puerto Rico, the rendering of services by a non-resident person to a person in Puerto Rico, and combined transactions. What are combined transactions? Well, combined transactions are defined as the sale of 2 or more goods and services where you can identify each one of the goods or services separately, but they're sold at just one combined price. So, and then if you have one of these transactions, you will need to do some analysis and see, if like for example, if there is a combination of exempt and taxable transaction, which is going to be the dominant factor to determine whether the transaction is taxable or not. Also, the VAT is imposed on the introduction of a taxable article to Puerto Rico. So it also applies to introductions and imports into Puerto Rico, to sales of goods and services within Puerto Rico. Unless a good or service is specifically excluded or exempt by the law, the VAT must be paid and or collected upon the good or services or the introduction of the article. So we need to talk about, just go back a little bit, about what are goods, what are services, and determine whether there are exclusions and exemptions from those terms, and in addition, determine whether there are exempt persons receiving taxable services or taxable goods, which also will be an exempt transaction. So to start with the term goods excludes money, stock, bonds, notes, life insurance, and other securities and obligations. These are financial items that are always exempt. It excludes also intangibles, and for the first time we have a definition of an intangible. Before, under the sales and use tax law, intangibles were also exempt, but there was no definition to the term. The definition that has been adopted is one similar to the definition of intangibles that was used under Section 936 of the Internal Revenue Code of the U.S. And it basically includes goodwill, copyrights, trademarks, franchise, vacation clubs, patents, inventions, formulas, processes, designs, know-how, systems, programs, just to mention some. One important item that is not considered an intangible for these purposes is computer programs. So this is an item that needs to be evaluated very carefully. Also, the following will not be included in the term goods: blood products derived from blood and human tissue and organs, electricity, water supply by the Puerto Rico Aqueduct and Sewer Authority, or any property of the Commonwealth of Puerto Rico or the U.S. government. These are, again, excluded from the terms good. You must keep in mind that because something is excluded from one term doesn't mean it's exempt from VAT. You have to be sure that it's not covered by any other term under the law. So it's like a elimination process in order to conclude whether something is exempt or not.
On the other hand, we have the term introduction, which excludes the following items. Basically, articles introduced into foreign trade zones, articles that are part of a move, temporary introduction of articles, alcoholic beverage deposited in a bonded warehouse under certain conditions, and certain promotional material introduced into Puerto Rico.
Here, it's very important that these items might be a taxable good, a taxable item, but if they're introduced in such manner as described here, then they're not taxable.
Not at that moment of introduction, they are not considered introduced to Puerto Rico. In the case of bonded warehouses, for example, it is the same rule as foreign trade zones. When the articles are taken out of the bonded warehouse or the foreign trade zone, they are considered introduced to Puerto Rico.
The term services excludes services rendered between members of a control group or a group of related entities, and for these purposes, both entities need to be engaged in trade or business in Puerto Rico in order for these services to qualify as excluded items. Services rendered by the Puerto Rico government or the U.S. government are also excluded, as well as services rendered as an employee, and shipping services of goods by air or sea transport, as long as they're not part of the delivery charges. The term sales excludes exempt transfers under Subtitle A of the code. These are the tax-free reorganizations and restructuring. Usually there's acquisition of assets and transfer of goods during these reorganizations. These will be excluded from the term sales, as well as the delivery of donated goods will not also be included in the term sales.
Other items are excluded from the VAT are certain entertainment machines, not all of them, certain sales by non-merchants, and certain admission rights.
Okay. In addition to an article not being considered a good or service, as we just mentioned, there might be some taxable transactions that are specifically exempt from VAT. And we there list all of them as they're actually included in the law. Certain financial services other than bank charges. In this term, financial services, you will find services that are usually provided by banks, service and loan association, and brokerage houses, but also the insurance company services will also included and are included in this definition of financial services. You will see here some common ones like the prescription medicines and articles for the treatment of health conditions, articles and equipment to correct physical deficiencies, sales and services that qualify for Medicare, Medicaid, and the Puerto Rico government's health insurance plan, sales and services to the U.S. government and the Puerto Rico government, the sale of petroleum products because these are subject to special excise taxes, the room charges, the hotel room charges, because these are subject to the room tax from the tourism company, the sale of unprepared food and food ingredients, the sale of goods acquired with PAM or WIC funds is also exempt from the VAT, as well as the sale of real property and the lease by individuals of real property for their principal resident and student housing. Also, please keep in mind that the commercial real property leases was kept as an exempt transaction under the VAT. Sale of goods by nonprofit entities, as long as these goods were acquired by the entity through a donation, sales to qualifying hospital units, sales to bona fide farmers, sales of goods by churches or religious organizations, and educational and child care services are also exempt transactions. Sales to hotels to be used in the exempt operations, the sale of printed books, vehicles, boats, and heavy equipment because these are subject to special excise tax, certain health and hospital services in humans or animals, and legal services in cases involving family food, medical malpractice, and mental and physical damages claim. One important thing with the legal services, and it's a question we face almost every day, is that there was a proposal to exempt legal services provided by an attorney allowed to represent before the Puerto Rico court system and the U.S. court system, and the notary fees they charge were also proposed to be exempt, but that amendment did not go through. So as of today, the only legal services that are exempt are those involving the family food, medical malpractice, and mental and physical damages claims. Remember, legal services are part of the designated professional services group for which the 4% needs to be start to be collected on October 1st.
We already talked about the exempt transactions. Now we are going to discuss some exempt articles for VAT purposes. Similar to the sales and use tax, we have some exempt articles that are introduced to Puerto Rico, like the raw material and machinery equipment for manufacturing plants. Remember, only raw material and machinery equipment. Anything else imported into Puerto Rico, like office supplies or anything else that is not related to the manufacturing process will be taxable. We have also exempt as the prescription medicines as exempt items. We have articles for the treatment of health conditions. We have articles and equipment to correct physical deficiencies like prostheses, and articles that qualify for Medicare, Medicaid, and the government health insurance plan are also exempt from VAT.
Just a clarification, you might say, but these are the same ones we said they were exempt. Remember, when we talk about exempt transactions, those are local sales done within Puerto Rico by a seller, to a purchaser. What Javier is mentioning now is also that these items will be exempt into Puerto Rico by the importer. So it's very important to have the distinction, because if we would not have the exemption upon introduction, it might be the case that the VAT might apply to the introduction and not to the sale of the item in Puerto Rico.
Correct. We also have as exempt articles any article introduced by the federal or local government, petroleum products that are introduced to Puerto Rico. These are subject to excise taxes, certain unprepared food and food ingredients, and machinery and equipment for hospital units that hold a certificate of exempt purchases. We also have as exempt articles the articles introduced by bona fide farmers. Very important to mention here is that we don't know if they're going to keep the requirement of having the excise tax identification number they currently require to the bona fide farmers. If that is kept as a requirement, it is very important to renew that number on an annual basis. Also have certain articles by hotels to be used in the same operations. We have printed books and vehicles and boats and heavy equipment which are subject to the excise tax.
And with this is all we had for today. We have not received any questions from the attendants to our webcast today. So it seems like everything has been clear enough. Hope we haven't confused you guys more. Please remember that next week we have our last webcast in this series, and there we'll be talking about what is the implementation process and what you need to consider when getting ready for this tax that's going to be in effect in April 1st. Remember, the law 72, allows the Puerto Rico Treasury Department a 60-day extension if they deem necessary for the effectiveness of the VAT. So the latest right now that the VAT is going to become effective would be June 1st of next year, 2016. Again, as you're going to be seeing next week, this is a process that might take a couple of months or maybe 3 or 4 months, depending on the complication of your business, for which you need to take control and make plans in order to be able to be ready by the effective date. Lately, it seems like the panic button has been activated, and we are receiving a lot of concerns and questions, especially related to the October 1st date on taxable sales and designated services. But we certainly recommend you to take your time and analyze the impact of the VAT upon your business so you can make good business decisions with time. With that, we don't have anything else to talk to you about, so we'll expect all you guys next week. Thank you and have a nice day.